You want to kick us off?
I do. Thanks, Aaron. Hello, everyone. Happy Friday. We know that based on the thousands of people that have been coming to us over the last 6 weeks, that you're all making really big decisions in really challenging times. And we thought that based on what we're seeing recently, that it was really important that you have access to information as you make those decisions about what it might take to close down a nonprofit in California. Obviously, we're hoping that those resources stay available in communities and that we get creative to figure out ways as we work through the spring and summer. But in the meantime, we thought it would be helpful to arm you with information that you can take to your board meetings to think about, so that this is one less thing on your to-do list to do the homework. So Arthur, thank you so much. And Renlyn, thank you so much for being available. We've been trying to keep track of what the latest questions are coming to us and then finding experts that our colleagues can count on. And we certainly know that you two are two of those that are so valuable to our community. So I'm going to turn it over to Arthur. And thank you so much for being available. I forgot to mention, and probably Aaron will mention, that they will be answering questions that you put in the chat room. So we'll be keeping track of what you're asking, and we'll make sure that we get to those answers. Thanks so much, Aaron, and thank you, Arthur.
Welcome, Regina. Thank you, Aaron. Thank you, everybody, for being here. I've been associated with the Center for Nonprofit Management one way or the other probably more than 20 years. So it's nice to be back presenting to the organization. When Regina came to us, my thought was, well, we can certainly go through the legal steps of how to dissolve a nonprofit, which is how you formally close down a nonprofit. But there are so many other issues that one wants to address. And so if you're thinking of, my gosh, we don't have the resources, what are we going to do? Do we have to close down? There's so many things we want our clients to consider before they take that step. So Randall and I are going to go through and talk about some of the considerations, the questions you will ask if you're thinking of closing down, going through an initial assessment of the situation, looking at other options, because maybe there are solutions that don't require you to shut down. Then we'll talk about the legal process and the practical process, which is really where Randall's going to come in, particularly because my law firm, the Law Firm for Nonprofits, does what law firms do. And among the other things law firms do for nonprofits or anything else is to help businesses close down. But there's a whole practical side. It's not just the legal steps. And Randall's firm, Benevolent Vision, and I'll let her talk about what they do, helps clients manage all the stuff that we just tell them how to do. And that's actually probably a lot harder to process and undertake than legal steps are.
So we work regularly with the Law Firm for Nonprofits, and Arthur and I have known each other for close to 20 years, since the beginning of my firm. And I'm an attorney by training, and I practiced for 7 years, but I no longer practice. So I rely on Arthur and the expertise of his firm in order to navigate the legal aspects. We navigate the functional aspects, and also the below the line issues of how people are feeling about this, what this really means long term, and who we want to be as we walk through this process. So both the functional aspects on the management side and what you need to do technically, and the side of who you want to be as you walk through this process. And some of that emphasis on who you want to be came from training from the Center for Nonprofit Management and the initial coaching class that they had that I did with Regina.
So what we're going to want to, Aaron, you want to put up that first slide for a moment? Thank you. This is what I mentioned. This is kind of our outline. We're going to first talk about considerations, really the questions to ask when you're considering whether to close your organization. So we can go to the next slide. So, and thank you. And Randall and I will go through, we'll dialogue about this, and then we'll take questions at the end. So if you're thinking of shutting down, one of the first questions to ask yourselves, and if we're talking about the board as well as senior staff, senior management, is why do you perceive the need? What is the situation that's forcing the organization to think about having to close down? In some cases, that's going to be right in your face. You just have no money. In other cases, maybe a variety of things to consider. And it's never an easy process, but there are a lot of things we know you want to look at and things to consider before you actually make the decision to close down. One is, have you done a projected cash flow? Many times an organization is struck by the immediate situation. For example, with COVID-19, maybe money flows have stopped, maybe you can't serve your clients or your constituents because you can't reach them because you don't have the staff, whatever it may be, but also you have to look at things beyond that. So what is your cash flow projection? Is there a way to manage your money flow so that you can stay in business until we can get back to business? Another thing you may want to think about are what are the assets you have that can be leveraged? Of course, these days, some nonprofits, not all unfortunately, have been able to get their PPP loans, the Paycheck Protection, I forget the actual acronym. Plan, thank you. Loans that are almost free, I'm going to say free money if you're able to get them. There are also other loans that are available from the SBA, which are unusual, but also if you have assets, if you have property, real property, or you have certain intellectual property, perhaps you may be able to borrow short term, you may be able to borrow from board members. And if there's a light at the end of the tunnel once COVID-19 goes away, or at least we're able to get back into business, is there enough cash to keep you going? That's one consideration you want to think about. And if you have to borrow to do that, well, that's certainly an option. Also, as I suggested, this is going to go away at some point. Is whatever your need is, whether it's having to do with COVID-19 or something else, is the current situation transitory or is it long-term? Of course, with COVID-19, we really don't know when we're going to be able to get back to normal or what normal is going to mean. But if the situation is short-term, something that will go away, maybe there's a way to address this so that you can stay in business beyond whatever that transitory window is. Also, are there alternative ways of thinking about your nonprofit's business? I use the term businesses and nonprofits deliberately as an aside. I believe nonprofits are businesses. They have to operate like businesses. They have to have business processes and business systems. Just the way they make money and the way they measure success is different than for-profit businesses like the supermarket. And what businesses do in times of crisis is think about alternative ways of carrying out their business, keeping their people employed. So Tesla's now making the breathing devices. Breweries and distilleries are now making hand sanitizer. They found other ways to use their capabilities to serve current needs. There may be ways for your organization to think about other ways to carry out its services or use its capabilities to stay in business. Maybe you won't have enough, you don't have the same amount of business you had before, but it may allow you to stay vital. And if you can stay vital, then you'll be able to come out of this if it's COVID-19 that's driving your need to consider closing down. Then if you're able to come out of that at the end of that tunnel and be forward thinking, and you'll be able to take advantage of whatever opportunities are going to be out there in the future. I think it's very important to have that type of mindset as opposed to think, oh my God, it's going to end, or bury your heads in the sand. So if you're able to keep the business going, you've got those options. And then the last point on this slide is, are there ways to ensure that your constituents' needs are met? If you do have to shut down, who's going to take care of your constituents? Even if you don't have to shut down, but you have needs, or your constituents have needs, is there somebody else who can fill them for you? Can you collaborate with another organization, another government agency, as the case may be, to keep the needs of your constituents satisfied? So with those considerations, now we're going to talk about some of the different options you have if you are thinking about shutting down. And this kind of flies upon what we've already talked about. One, of course, is dissolution. Dissolution is the formal legal process of winding down or shutting down a business. There's a statutory process for doing this if you're a nonprofit corporation. Another option is to find a merger partner. Is there another organization you can merge with that will allow your organization in one form or another as part of a bigger organization, perhaps, to continue serving its constituents? Oftentimes, when a business or a nonprofit is having difficulty because of financial considerations or because the board gets tired or because of whatever other reason, there's often a larger or better run organization or more stable organization that will partner with you, basically absorb what you're doing, absorb your assets and liabilities, and allow you to continue to function. Maybe under your same name, maybe not, but at least allow you and your staff and your constituents to continue to in fact be in business. Bankruptcy is also an option. Nonprofits usually don't file for bankruptcy because the dissolution provisions, at least in the California Corporations Code, give organizations a lot of room to close down if they need to. But there are two different types of bankruptcy that are usually applicable to nonprofits. One is reorganization. This is a Chapter 11 bankruptcy. And under Chapter 11, the organization can basically reorganize in a way that allows it to continue in business, but to essentially eliminate some of its debt and to redo its contracts. If you file for a bankruptcy in the Chapter 11, all contracts, all obligations are stayed, meaning that none of your creditors can go after you. It gives you some breathing room. In the for-profit world, there are many large corporations that have used reorganization and bankruptcy to restructure and to stay afloat. United Airlines has done it, Continental Airlines did it twice. GM did it during the last financial crisis. It's a common practice. Liquidation and bankruptcy is a more drastic process. This is the process you go through in bankruptcy court to shut down your organization. Assets are distributed to the extent that you have assets to satisfy creditors. But what it does is, if the process goes smoothly, and it doesn't always go smoothly, it absolves all the parties of any liability. So in the case of a nonprofit corporation that's going through bankruptcy, it's going through a crisis. If you have concern that there are creditors who may come after you or your board members, instead of going through the formal dissolution process that's set forth in the Corporations Code, liquidation in Chapter 7 may be a valid and valuable option. Pardon me. In some cases, there are alternative sources of fundraising. So I already talked about PPP loans and so forth, but sometimes there are ways to get money from funders that you don't normally think about. Some funders, for example, have put together emergency funds to help nonprofits. I know that some of these amounts may not be large, but in the arts world, there are tons of different organizations that are coming together to make sure that arts organizations can stay afloat. I'm sure that's happening in other sectors as well. There may be donors who you can go to who you don't normally think of as being your kind of angel donors, but sometimes you can go to them and say, "Hey, can you help us? We're in a real difficult situation." We've seen that happen with a couple of clients recently with regard to COVID-19. There may be other ways to raise funds. For example, things you've not thought about before, like crowdfunding campaigns, putting on special events, like some organizations have used at-home fundraising events. They're not raising the same amount of money they raise at a big event at the Beverly Hilton Hotel, but they're raising some money, but it helps the organization stay afloat. Again, debt or leverage acquisition. I mean, leverage or debt acquisition is an option where you borrow against your assets. Another option that a lot of people forget they can do is just kind of go into hiatus, meaning you just slow down, you kind of go into hibernation for a few months until things are over. That's definitely an option. And then there are sometimes alternative business models. So reforming what you do, how you do things, maybe think about the type of business structure you have and converting from I won't say converting from a nonprofit corporation to a different business form, because that's usually not viable for the nonprofit world, but maybe thinking about a different business model, different way of structuring your business, which is something we talked about a few minutes ago. You want Randlin?
Yeah, so if I could share a little bit just in terms of that, we've seen a lot of the alternative business model taking place with clients and a lot of utilizing their existing programs in a different way. And two of the simple examples that I have is a client that was previously doing food pantries. That was a big part of their business in New York. And they're right in the center of Queens and were very heavily hit. So they thought initially that they would be shutting down the food pantries because it was a very small space and intensity of personal contact and no possibility of real social distancing in the existing space. So they rethought it and they ended up garnishing enough volunteers that could safely bring food to the doorsteps of those in need. And not only did they do that in the Queens, New York area, in the Texas, Dallas area, and Austin, they ended up having an extended net of 90 square miles where they were reaching out to the religious organizations from the community that they served. And they gained a lot of elder families and elders that were without any forms of support. So they actually almost became an equivalent of Meals on Wheels, but of weekly groceries in an area where those things did not exist, and to a community that was not normally reached. So that was a good example of alternative business models where they actually ended up expanding a program, and they got donations for that because there was such an urgent need. It was very easy for donors to relate to the need for food.
It's a great example. So after all this talking, and all this thinking, if the organization decides it needs to dissolve, I want to just walk you through and very briefly the legal process. So we've got about 13 steps here, and I'm going to just briefly talk about it. When you have to dissolve, you may want to hire a lawyer to do it. It's a little bit cumbersome, but if you can read the corporations code, you may be able to get through it yourselves. But it's a very formal process you have to go through, especially if you're a California nonprofit public benefit corporation. So in California in particular, you must follow this process. You must get essentially consent from the Attorney General, which I'm going to talk about. So the first thing you need to do before you dissolve is make sure that you have current income statements and balance sheet. These are important because you need to understand what your assets are. You need to understand what your cash situation is, and the Attorney General will ask for them. By the way, it's not on the slide, but one thing you have to do is make sure that your status is current with the Franchise Tax Board, the Secretary of State, and the Registry of Charitable Trusts. If your status with any of those agencies is not current, other than the FTB, you can't dissolve until you get those current. So I would advise every organization right now right after the program to go online to the different agencies' websites and make sure you're current. And if you're not current, do what you can to get current in case you do need to take drastic steps, whether it's dissolving or even if you need to get a loan. For example, if you were applying for a PPP loan, if you were not current with the Secretary of State or the Franchise Tax Board, the loan would be denied. So this is just something important that you want to do all the time. Next step is to itemize a list of all your creditors and other liabilities because you have to take care of them. Then you want to identify one or more other 501c3s that do similar work to your organization to receive all of your assets after dissolution, assuming your organization has net assets. Once that's done, then you get into the formal legal process. Then the first formal process is that the board of directors has to vote to wind up and dissolve the corporation. That will include a plan of distribution of assets. In other words, telling in the resolution what are these other 501c3s that are going to get your assets. If you have voting members, that is people who get to elect directors, they also have to approve the dissolution. So you have to have votes of both members and directors if you have members. Then you must prepare 1 or 2 certificates for the Secretary of State. One is a certificate of dissolution. And if the vote to dissolve is not unanimous, then you also have to complete an election to wind up and dissolve. Then you submit those documents and a letter explaining why you're dissolving to the Attorney General, to the Registry of Charitable Trusts, which is a branch of the Attorney General's office. In that letter, you ask the Attorney General to issue what's called a waiver of objection rule. They have to issue that letter in order for you to formally dissolve. Generally, that's not a problem, but if the organization is not current with the Registry of Charitable Trusts or there's something that just doesn't look right to the Attorney General, they will deny that letter and you can't dissolve until you fix whatever the discrepancy is. If you have employees, you're going to have to at some point terminate your employees. And I'm not an employment lawyer, but I think Randall and I both have dealt with situations where organizations have dissolved and they've had to terminate their employees. There's a process you have to go through. You have to take care of your employees. I'm not going to go into that now, but that can be a timely and costly experience, but it's something you must do. You want to go to the next slide, Aaron? Thank you. So again, terminating employees. Then one thing to also think about is consider buying tail insurance coverage. Many organizations wind up dissolving, but they may have some potential liabilities, whether it's employment-related liabilities or other potential torts or harm that's out there, or damages that people can sue the organization for. If the organization has the assets, it's often worthwhile to buy tail insurance coverage, or what's called extended coverage, which means that even though the organization shut down, the insurance carrier, your D&O or your general liability carrier, will continue to provide insurance to protect the organization's directors and officers and key employees for up to 3 years after the termination of the organization. Another thing you must do is you must pay your creditors to the extent you're able to do so. That's pretty important. And if you don't have the assets to pay off your creditors and they don't issue a letter saying we're not going to sue you, there's a very formal process you have to go through to send notice to all of your creditors, tell them you're not able to pay off the debts, and then allow them to bring an action against the organization in court. And then that doesn't usually happen, but sometimes creditors will sue. If that's the case, then that's certainly a situation when bankruptcy may become an important option to you. So once you've done all that, and once the Attorney General has sent back this letter waiving its right to object to your dissolution, then and only then may you distribute your assets to the designated 501c3s. You want to set aside a certain amount to pay for final wind-up expenses. For example, you have to do final tax returns and so forth. But once you've done that, in other words, once you've filled out, you signed all those Secretary of State forms, you've received a letter from the Attorney General, you've distributed your assets, then you can submit those 2 Secretary of State forms and the certificate from the Attorney General to the Secretary of State. They will eventually stamp those forms, usually the day they receive them, saying that effective as of that date, the organization has been dissolved. It doesn't mean it stops. The organization still has to go through a variety of processes to wind down. It may have to do with employment issues. You may have some other business you need to wind down, so that somebody needs to stay around to continue the business of the organization, to wind it down. And part of that process will also be preparing and submitting a final 990, a final 199 with the Franchise Tax Board, and a final RRF1 with the Attorney General's office. And other states, by the way, have different processes, but they're fairly similar. Once all of that is done, then the organization is finally done. You can close the door, and it's finally terminated at that point. Now, Randall's going to talk about how to actually make this happen from a functional perspective.
So from a functional perspective, we always start with the board and our key leadership. So my recommendation is that as you're reviewing what your options are and thinking about what's possible and thinking about what's best for the organization, that you assemble both the full board and your key leadership, and that you have an internal kind of smaller team that can walk through the technicalities of it and do necessary analysis. So I'll give you an example of that. When we're talking about cash flow projections, you'd want to have, of course, your CFO and the treasurer in on that. And if you don't have a CFO, you have a controller or a bookkeeper that's going to assist you with that and the ability to look forward of what might be possible. That's one example. Similarly, if you're looking at other options like mergers with another entity or sharing space, letting go of your lease, anything like that requires key leadership, whether you're a large nonprofit that has a more robust infrastructure or you're a smaller nonprofit that has perhaps just an executive director and a few program people. You can still put together a meaningful leadership team that's going to look at these issues together. These are not things that can be navigated by the entire board. They need to be walked through properly and then presented in a way that we can manage it. Today we have some difficult news to present to a client, and the consultant I'm working with was a little overwhelmed by it. I said, well, it comes down to how do you eat an elephant? And that's one bite at a time. So we want to be able to present to our board and to our staff what's happening in a clean and concise way, because who you're being during this time, how you're doing this analysis, how you're presenting it, has a lot to do with how it will be received and how well you'll be able to navigate these really challenging issues. So it's just a bit about those initial steps. Once you've made the determination that in fact you do want to dissolve, you have various issues such as communication to your donors, communication to your staff, communication to your vendors. So if you have the assets to pay the immediate debts, but not continue operations, and you're able to do that, you want to complete that as much as possible. And if you have limited assets and are not able to fulfill complete commitments, then you want to negotiate the debt as best you can in the situation as you're entering the dissolution. And if you're entering any bankruptcies, you want to demonstrate that you've been able to do that part of it. I want to talk a little bit about how we communicate with our staff and how we communicate with our board, what the board's role is, what the staff's role is in this process. The board's role is typically the role of oversight, right? We want them to be educated about what's happening. We want to have their insights and their expertise as we're walking through this. And we want them to be able to make decisions that will then be acted upon, because this is the equivalent of a very strategic action by the board and a very large action by the board. So in that sense, that is their role, but we also want them to stay in their lane. And there's a tendency from my experience during dissolutions for boards to start micromanaging or to get involved in the weeds or areas that they might not normally get involved in. And this can both create some tensions and slow down the process that the staff is trying to walk through. So we want to be really clear about whose responsibility is what. And obviously the treasurer and the CFO and the chairman of the board are going to be, and the CEO or executive director are going to be deeply engaged in these things. If you're larger and you have a COO, they would be critical. So I'd say that those people would be your critical team members to be making decisions together. That would then be brought as recommendations to the board of directors for final approval. So we talked a little bit about the board's role, a little bit about the staff's role, and a little bit about the employees, I think, is what we should talk about next. So if the determination is made to dissolve, you're going to need your staff to assist you in this process. So that will mean communications with the beneficiaries that you've been taking care of and supporting. It'll be communications with your partners. It'll be communications with the vendors and communications with your donors. So each of those require messaging, and coming up with a clear and consistent message would be critically important, because who we are as we walk through this and how we walk through this will not only impact the experience of your nonprofit, it's also going to impact the experience of your donors and the community overall, and what the likelihood is of them having trust and reliance in another nonprofit organization in the future. So if this is done in a way where you have transparent communication, where you walk with dignity and grace as you do this, where you think about who you want to be during this process, as well as the technical aspects of it, I think we have a much better chance of a much better outcome. And Arthur referenced the importance of having your board vote during this process. And your opportunity to vote on the process is in a board meeting that can be telephonically done, or if you've had sufficient conversations and board meetings, and you can't get everybody, or you can't get a quorum together online for some reason, you are able to utilize a unanimous written consent. But of course, we want to have some form of meaningful discussion taking place with groups of board members, and certainly the whole board if that's possible. So walking through and documenting that. My recommendation in these situations is that you have a fairly tight agenda, and that agenda never ever go into a meeting like this or any form of even potential discussion of dissolution, or the options that Arthur had listed for us, the concept of mergers, dissolution, loans, and I'll talk about loans from board members as an alternative method in a moment. You never want to enter those conversations without having a tight agenda. What do I mean by a tight agenda? That means an agenda that has specifically listed the items we're going to talk about, and that you have a person on the board of directors or on the staff, whether that be the CEO or whether it be the chairman of the board or a facilitator, walk you through these issues. Why am I leaning towards a tight agenda? Why am I emphasizing agenda items so much? Why am I addressing the need for a real facilitator? And Regina's shaking her head. So we're saying that because from the minute you send out that email, you need to be in control of the messaging in the situation. And your being in control of the messaging in this situation as a leader brings calm and the ability to think straight to the board members and staff that you're communicating with. So you as the leader and who you're being is critically important in terms of your messaging and your presence. And providing a clean agenda where people know what to expect during the meeting They can actually kind of swallow the concept of dissolution for a moment. They can swallow the concept of taking out a loan from a board member. They can swallow the concept of cutting down programs and merging, because you've given them a chance to see it on paper as a topic before they walk into that board meeting, virtually walk into the board meeting, or before they are on a teleconference with you. So those are my recommendations in terms of setting yourself up for success. The second opportunity to set yourself up for success is to make sure that you gauge the room and actually gain the conversation and opinion of each person who is a stakeholder in that virtual room with you in Zoom or some other virtual platform, that you actually make sure you ask of the opinion of each person. How are they? What are they thinking about this? And how are they feeling? And if you leave out the how are you feeling part, you will ultimately fail, because you will gain resistance and there will be objections. People won't be comfortable enough. Once people have the opportunity to express their fear, once they have the opportunity to express their opinion or their expertise, once they have the opportunity to express their grief, even if it's just in 2 simple sentences, then they'll be in a place where they can actually listen to you and they can intellectually process the challenges of a dissolution and what that might mean. They could also intellectually process the possibilities of a loan from board members, the possibility of a merger with an organization that you may have perceived as a competitor or may have been perceived as a collaborator, and what it might do to consolidate your operations during this time, what it might be, what it might mean to actually merge, what it might mean to let go of part of the lease space you have and ask the landlord for some reprieve there, or frankly, make it clear you're unable to pay the lease at all, and what ramifications or solutions there might be to that. All of this takes clarity of thought.
I just want to, Randall, can I interject for a moment?
Please.
One of the things that I think you talked about feelings. Often one of the feelings that people have is a feeling of shame. The need to dissolve or shut down is often perceived as being a failure, and people feel ashamed about it. It reflects badly on me. The fact of the matter is that all businesses go through cycles. Probably the majority of businesses go through a dissolution or a merger or some type of major crisis at some point in their life cycle. That's just the way of business. As I said earlier, nonprofits are businesses in many practical ways. So part of the discussion process is to make sure that nobody feels shame. Nobody is taking blame for forcing the organization to something that is considered by some people to be negative or to be a recognition of failure. It is not the case. It's especially these days with COVID-19. This is completely unpredictable. No one can be blamed for the way our businesses are suffering because of this. So make sure, please, if you're going through this process, that it's kept uplifting. When Randall and I were talking about this the other day, I think her approach is one of almost a spiritual approach. Mm-hmm. There's a way to keep this positive, to keep this uplifting, and I think that's very important. I encourage everybody again, avoid shaming, avoid blame, focus on the good the organization has done, focus on what the future may hold for the organization in one form or another, for your constituents, for the board members, for the staff, and be positive.
I think there is actually a spiritual element to this. And the first dissolution that I participated in, I was a young consultant. I had practiced law for 7 years. I was used to solving problems, and I was brought in to facilitate a conversation about dissolution with a religious faith-based organization that was running a religious school. What I was struck by and what I learned from this was they had walked through the fear, they had walked through their guilt, they had provided a venue to have open conversation. We did part of that together. And where they came out was that this was a tremendous opportunity for them, because in their situation, they had no further capacity to operate the school, but they had the asset of real property. And that asset provided them the funds that could be put into a foundation or delivered directly into the community to other nonprofits that shared their same mission, and what meaning that would have. And that they could actually make a donation and that could have a name to it at another school, or they could create a foundation and then distribute the funds over years. So they were, in the end, empowered by the dissolution. And that just shocked me as a 32-year-old consultant. I couldn't believe that dissolution could be a positive thing. And that was a wonderful lesson for me to learn early on. So that a lot of that goes back to the who we're being in the moment and making a decisive choice that we want to walk through this with grace. We want to lead with grace, and that we are going to find the silver lining here, regardless. There's an excellent question here, which is how should we communicate with clients and how should we communicate with donors? This is critically important for your cause. It's critically important for how people can go forward and find additional help that they need if they're one of your clients. So one, Arthur mentioned, who's going to take care of your clients? How can we redirect them? What referrals do we have? So that is the responsibility. I consider that to be a responsibility of a program that's dissolving. That if you're going to walk out of this at your highest and best, that you find a way to communicate with your clients the additional resources, and if at all possible, to make warm introductions. Not cold introductions, which is here's a list of referrals and resources for you, but warm introductions that I'm passing what we can, following HIPAA or following whatever other regulations you might have in terms of confidentiality. I am passing your information on to this counselor. This is their name, this is their phone number, this is their email address. May I do that with your permission? You might have to have a special form for that. Or you might be able to make a warm or hot introduction over the telephone. When I was executive director for a women's organization, my firm served in the capacity as executive director. Our hallmark was that we always made warm introductions. You never just received a name. This is, of course, not always possible. But if there are things like that possible, that makes a tremendous difference for people feeling cared for and transitioned successfully. So you would have communication on your website, you'll have communication via email, a phone call communication from the case manager, program coordinator, person responsible would be most appreciated. I'm quite confident by your clients and beneficiaries. And hard copy letters are all possibilities. I highly recommend more than one form of communication and communication more than one time. As we know, when we're raising funds, people don't send in the donation on the first solicitation letter or email. They send it in on the third. So it's going to be the same thing with the transition of clients. The second category we have is how do we communicate with our donors? So your donors deserve a personal phone call if they are a long-term high-end donor without question, and they would expect it. And I think they should be brought into the conversation, certainly as you're considering dissolution, because guess what? Someone doesn't accumulate great wealth and maintain great wealth without the capacity of understanding how money works and understanding the value of money. So you could have some wonderful conversations with donors that might surprise you, their ability to help you see other possibilities, their ability to help fund part of the transition programs. Maybe you still need to dissolve, but they want to make sure that you have a clean transition. They may support you in that because they believe in the cause. How else do we communicate with donors? Perhaps your everyday donors that are your annual campaign donors at smaller amounts. This through email communication, through a videotaped message from the executive director or CEO, a message from a grateful beneficiary. Anything that you can do to humanize this process will make a significant difference in the life of yourself, of your beneficiaries, of your donors, of your board members, and of the staff. We want them to feel as good as they can about this transition. The next thing I want to talk about very briefly about your employees is the critical importance of educating them about unemployment. We have unemployment benefits like we have never seen in this country before taking place. This is critically important that we educate our employees, whether you are reducing their hours and wages or whether you are terminating them completely or they are on furlough, that you do your very best to do something you may never have had to do before, which is to educate them about unemployment. That may be as simple as having a shared experience on a webinar that is run by your HR specialist. That could be a meaningful opportunity. It could be a webinar that it's pre-recorded that you lead them to and ask them and pay them if you can to watch and ask them to participate in. So these elements also really have a high impact on how people feel and what your experience is as you complete this process.
Awesome. Thank you so much for all of that information. I think that was incredibly helpful. A few questions came in, and please continue to submit your questions in the chat. First two questions that came in had to do with how to think about altering your business model as you were describing it. and specifically how to do it without jeopardizing your 501c status. So kind of two questions, one from Bambi of like, to what extent can you work outside of your mission without jeopardizing your status? And then kind of relatedly, Deli asked about, pausing or waiving some of the restrictions on raising money. For instance, selling essential items that were specifically donated to the organization so they could make money, like selling hand sanitizer or face masks or something. So in that like world of trying new things and pivoting, where is the line that would jeopardize your status, and sort of how creative can you get?
Okay, I'll take the first swing at those, then Randall, please add.
Sure. I'll share a real life story to complement Arthur's
Okay.
legal position.
So in the first question, Bambi's question, the term used is mission. What we look at, what the regulators are going to look at are two things that are somewhat different. The Attorney General, which regulates nonprofits in California, of course, will require that an organization only carry out activity that is just somehow described in its articles of incorporation. Most nonprofits' articles of incorporation, there's a purpose statement that our purpose is to support the needs of the homeless, and that such other activities related to this purpose as are permissible by law. So whatever an organization does, it somehow needs to fit within that purpose statement. So sometimes there's kind of fudge language at the end that says, or any other charitable activity, then that you're wide open to do that, you would think. If not, you may have to amend your articles of incorporation if you want to do something new. We've had clients that have done that in the face of COVID-19. They've actually expanded their purposes to provide relief for the needy as a result of this. So that can be done. The caveat to that is that money that you raise while your article said one thing cannot be used for the new things that are said in your restated articles or amended articles. So if your purpose was to aid the homeless, now you want to aid the unemployed as well. To aid the unemployed, you can only use new money that was raised after you amended your articles of incorporation. That's the state perspective. From the IRS perspective, a 501c3 may do anything that is permissible of a 501c3, notwithstanding what the state may or may not allow you to do. The caveat is that you should talk with your advisors, your accountants, your lawyers, whoever else, to make sure that if you're taking on an activity, it is done in a manner that is consistent with 501c3. So it's charitable, it's educational, scientific, it's relieving the pain and suffering of animals and children, things of that nature. And you're not engaging in unrelated business activity to any extent to this degree, which is the next question. And then you must notify the IRS of your new activity in your next 990. We've had organizations audited by the IRS because they engaged in new activity, but they didn't tell the IRS. It was perfectly legal, but the IRS gets really annoyed if you're engaging in things that you haven't told them about, because they feel that maybe you're cheating, you're trying to game the system. So that was an expensive audit to basically get the IRS to say, okay, you didn't really do anything wrong, but you just didn't tell us what you should have done. They slapped the organization on the wrist, but it cost them a lot of money in legal fees and accounting fees to just go through this silly audit. With regard to the second question, in general, a 501c3 that engages in commercial-like activity or activity that is not related to its exempt purposes, again, whatever is in the Articles of Incorporation, is engaging in the activity that could jeopardize its tax exemption. But there is an exception for organizations that sell donated property as a fundraising tool. So thrift stores, I'll give you an example. So the Society of St. Vincent de Paul in Los Angeles has the world's largest thrift store. It's 20 acres or something crazy like that. It's huge. They provide relief to the needy. You can argue that selling items in a thrift store are related, that activity is related to serving the needy, but really it's a fundraising activity. But 95 or 96, 97% of the material that is sold in that store is donated. Because it's donated, it's considered to be an exception from the rules on a related business activity. And so if someone donates to your nonprofit hand sanitizer and masks for you to sell to raise money, it's all donated. That doesn't result in unrelated business income, and it doesn't result in the violation of the rules against unrelated business or trade activity. Now, if you start to do that consistently, and that becomes the main part of your business, you may want to think about restructuring how you do business. But I'm sure this is going to be a short-term activity for as long as the COVID-19 crisis persists.
So in regards to I love those examples, and thank you for emphasizing the exceptions as well, Arthur. In regards to the changing of the business model, we've seen a lot of that. That's what's taking place. And one of the greatest successes that I saw during a disaster was a client, and in fact, the success was so great that their fundraising became so great, they started having board and staff conflict and control issues over what to do with the money. So it was really an incredible outcome. The disaster was the tsunamis in the Mentawai Islands. And this was an international nonprofit with chapters in Australia, New Zealand, and the US. And they ended up in a situation where their normal activity was prevention of malaria. That was their activity, prevention of malaria in the islands, where people from these communities had come to serve, from these countries had come to serve. They'd started a very successful nonprofit, very popular in the surf industry. And the minute the Mentawai Islands and Indonesia was hit, there was an outpouring of people wanting to help. So one, there was an influx of money because there was people wanting to help. But two, they stopped the malaria prevention. That became a sideline to bring in immediate relief and help, boats, staff, human, medicine, primarily medicine, to relieve the pain and suffering and the situations going on because of the tsunami. And then they got into assisting with housing and education and other things during that time. So they really branched out a lot. And they successfully did this because they had good counsel as they were doing it. But frankly, their first actions were act now and ask for forgiveness later in reality. And Arthur's kind of smiling because we see that a lot in disaster situations. But again, they were within the realm of charitable activities. And the interesting situation that arose after that was, how do we process all of these donations? And do we continue to sustain this activity after this disaster is over? Which they did. They continued to sustain those activities. Other examples of change of business model are the clinics that started as regular health clinics, and people were coming in for services. I have another client who's in California, heavily in California and in other states. So they have the health clinics. People are coming in for the health clinics in person. Of course, they can't do that during this time with the exception of the prenatal visits. Those are still going on. Everything else is done by telemedicine. A third client, housing. They do wraparound services, typically for apartment complexes, for workforce development housing. And their primary pitch is to sell these services. It's a revenue generating nonprofit model. Sell these services to the managers of the building because they then have better tenant outcomes. Had they ever done anything on rent relief before? No. Had they ever done anything with telemedicine before? No. Had they ever done anything with food pantry before? No. Guess what they're doing now? All three of those things. They turned on a dime very rapidly, and they're sending out the donation letters. And of course, they're going to have program descriptions that are dramatically different, new activity in their 990 tax return. But they got the board vote on each of those opportunities. They analyzed what the cost would be, and they looked at the relief that would take place for the workforce tenants that they were serving, not just in their own buildings, not just in the buildings that were in their network now, but an extended area, extended network in the greater metropolitan area. So they added additional buildings, additional tenants, and additional people receiving relief. And the cost was $10 a head for the $10 per unit for the telemedicine. So 40 units, $400, pretty nice way to have a significant impact on a very low dollar amount.
There's one important caveat to that. If you have super success, like the organization in the Southeast Pacific, you need to be careful that if you tell donors the money is going to be used for a particular purpose, it has to be used for that purpose. A lot of organizations, the American Red Cross got into a huge kerfuffle with the attorneys general in every state of the union after Katrina, because they said, we're going to raise money to assist victims of Katrina. In fact, what American Red Cross did is they kept half the money that was raised for blood drives and for their other programs. That was a violation of every state's what they call charitable trust law. And they were forced to make reparations, and a lot of hands were slapped and worse. So if you're out there telling your donors, we're going to use this money for COVID-19 relief, you better use it for COVID-19 relief. the safer bet would be to have in your advertisements a little disclaimer that says the ultimate use of these funds is going to be up to the discretion of the board. So if you're going to do that, talk to your advisors to make sure you do that properly and you do it in a manner that allows you, if you need to, not just willy-nilly, but if you need to use those monies for other things in addition to COVID-19 relief or whatever your or rent relief or whatever you're telling people money's going to be used for.
Yeah. So a little add-on to that, we do a lot of back office accounting work for clients or help design those systems with the CPAs. And one of the things that we find is a really great tool is tracking, establishing classes, establishing categories in your chart of accounts, and track what you're doing with those donations, those specific donations. That it might seem kind of common sense, but you'd be surprised what happens when you're in a disaster. Sometimes we forget those steps, and especially for smaller organizations that might just be running one program right now. If you expand and are doing something different, you would need different tracking, and that'll help you both in terms of your preparation for the 990, and it'll help you with your integrity and what you're doing for your donors, the trust that Arthur referred to in terms of both the law and trust as in your good relationship with them. There's a question here about what things to consider when reducing employee hours. So some of the things to consider when reducing employee hours are, number one, when we can, we want this to be equitable. So if at all possible, we want to have similarly situated employees being treated the same. That's an important element of this. It's important both legally, and it's also important from the emotional standpoint of what your employees are experiencing as hours are reduced. So my recommendation would be is that you pen it out and see what impact a reduction of 20% in hours would have, what reduction of 24% in hours would have. When you hit 25% reduction of wages, you start to have problems with the PPP and your loan won't be forgiven. So we don't want to see you go that far if you have PPP funds. So our recommendations to clients are, if you are going to have reductions, that you have a maximum reduction of 24% or 23%. So you're not pushing right up against that 25% number that the PPP guidelines are giving us right now. And that's developing. How our reporting is going to take place for that, how we avoid forgiveness of debt is developing. And we have 6 outstanding six applications, 3 funded right now with SBA numbers expecting funding, and a couple still outstanding that our team members have participated in. So we're watching that really closely, what the reporting is going to be. Other considerations for reduction of the employee hours are, if you have an HR consultant, this is definitely the time to call them, not after you've cut the hours, but before you cut the hours, because we want to do things like send them a letter explaining the reduction and cut, so they have an understanding of what that will be. And we want to, again, make sure that they're able to apply for unemployment insurance. So unemployment insurance will kick in if they have a reduction in hours. It's a little trickier for your salaried employees when you're reducing salaries.
Another
Gotcha.
consideration with that is, especially if you don't have a PPP loan, is if your pay rate is close to minimum wage, your employees may actually get better benefits, basically take home more money if you temporarily furlough them, because they'll get the regular unemployment plus an additional $600. I think it's per month, per week or per week. So they may make more. A lot of people actually say, I want to be laid off because I'm going to be able to make more money, take home more money than if you kept me employed, especially if you're going to reduce my pay or reduce my working hours. And
that's where the penning it out comes into play between your HR person and your bookkeeper or your controller or your treasurer and CFO. That's where that comes out. And a minimum wage employee is going to need you to help guide them in terms of what the options are. You can't give them the final advice on what to choose, but I think making it very clear what those numbers might look like as an example could be incredibly helpful, because it'll impact both them and their full families.
Yeah. We're just about at the end, but I had a couple of private questions that were about mergers. And I think some of the practical and tactical elements of initiating a merger. So, you're in this position where you're considering probably a wide range of options. Maybe merger is one of them. You identify an organization or two. What happens next? Does the ED just email the other ED? Just kind of what's the process for even initiating that conversation?
So I'll take it from the functional perspective, and I'd like Arthur to address it from the legal perspective. from the functional perspective, you want to choose who your best advocate is. So who's your best advocate in terms of relationship with the entity? Is it your CEO? Is it your director of programs? Is it the chairman of the board? So I'd always go with the best advocate, number one, who has the best relationship with this organization or with the person who's going to be contacted. That would be my number one recommendation. And that be a confidential conversation. If you choose it to be fully confidential and you have non-disclosure agreements, that's a more formal way to go. But if you frame it as an exploratory conversation between two peers, I think that can be a meaningful conversation to have. Before any of this takes place, and Arthur will address this aspect of it, the board absolutely, without question, should be involved. And I think for me, if I was advising from a functional perspective in combination with the legal, I would be most comfortable if my board of directors voted and authorized a person to enter into this conversation. And Arthur will give us the technicalities and the legal position.
That's such an interesting situation, Granlund. We had a situation a year or two ago where there was a multi-party merger, and the executive directors were all on board. They got funding from a community foundation to hire a consultant to plan the merger. And it came time they brought us involved. We wrote the merger agreement. Then it was submitted to the boards, and the board of the surviving organization, the one that was going to be basically absorb all these other organizations, said no. They declined the merger by a big vote. And the executive directors were all shocked. It turns out the board chair knew about it, but no one ever, in this 14-month period, no one had communicated with the board. They didn't like terms. Some of them didn't even quite understand why this merger was taking place. And so I don't know how much money was spent by the community foundation with the consultant. I can tell you the legal fees were not cheap, because when you have it's a massive document. But there was a lot of money, but more importantly, a lot of time that was essentially wasted because they didn't talk to the board and get board authorization for, as someone said, for someone to start the negotiations and to carry out the process.
On both sides.
On both sides, yes.
So this is not the time to silo.
No.
One of the big
and I just wanted to add, it seems that a couple of the key messages that you guys have communicated so well is that, it all comes back to mission, right? But that you can't assume that there's not going to be a lot of emotion around this, right? And managing a lot of spinning plates for a while. And, a couple things that we've seen, and Ranlund, really, to your point, it can be coffee, right? To just talk with colleagues about what are you seeing? What are you thinking about? Are there opportunities to help each other that could be the beginning of an alliance that might become a merger? It might sort of address some of the other options that Arthur talked about, right? That there's no shame right now. We have globally hit something that no one was prepared for, and figuring out how to serve the community with whatever resources we have. We're just finding, I know that it's May 1st. We teed this up because we knew it's bubbling for you all, that some really inevitably hard choices are coming. But, sort of tracking, what are your choices? How do we map this out? But I'm also seeing some creativity and such inspiration around the region. And, even if an organization chooses to sell a service that hadn't historically been in their wheelhouse, then, one of the CPAs that we talked to said, then they pay the sales tax, right? So to not be afraid of what you can't do yet, seems to be one of the messages. And then to figure out how to, it also, Ranlund, one of the things that you so beautifully described is how leaders have to really take care of themselves a bit so that they can have the brain space to communicate clearly, and work with a board, and a lot of different moving parts that you talked about, Arthur. I'm so grateful that you guys were willing to do this, and I was so struck by how many in the chat said thank you to you for covering a sensitive topic in such a meaningful way that balances both. I'm grateful because as friends, I appreciate that you stepped up with 3 days notice when I know you have lots to do. Erin, there are other questions. So do we want to take 5 minutes, see if we can answer the rest and then let everybody go back to work?
Yeah, I think we got one more that we can get to. I'm curious if either of you guys have a good answer for this, but Deli was asking if you have any templates that you can share on how to communicate with staff if they're reducing hours or pay or shutting down or anything like that.
So I don't have templates, given this is a case of first impression that we're in a global disaster. I don't have specific templates for this, but I am aware that some of the payroll companies, ADP, SurePay, Paychex, have a lot of resources on their sites. And I saw on one of those sites letters to send out to staff, templates for letters to send out to staff regarding reduction of hours in particular. So the first place I would go for those is to my payroll company, and then I would never send out exactly what the payroll company has. I would humanize it and give it your voice. How you communicate is as important as what you communicate, particularly in this environment. So humanization and warmth is the very most important. And I wouldn't want to receive that information in a letter first time. I'd want to receive that information on a Zoom or on a phone call.
No, I'm going to disagree with Randall a little bit. I would actually go to my payroll consultant or my payroll attorney, my HR attorney or HR consultant. Mm-hmm. And that is because we are in California. And I use a payroll service for my firm that is California based, but they're not even California compliant when it comes to things like this. I'm not an HR attorney, but I know many. And I know that when you're communicating with employees in California, if you say the wrong thing, you say something in the wrong way, you can expose yourself to liability. It's horrible to say that. I love my state.
True.
But it's just a fact of life of being an employer in California. So you can certainly check out the forms from Paychex or from ADP or from Gusto or whomever, but make sure you talk to your HR consultant first or before you send out anything, because you just don't want to make one of those missteps. And we want to think that all of our employees are going to be gentle with us because it's a hard time. There are already tons of lawsuits that have been filed against employers. You've got people who are hurting, who feel that they've been unjustly penalized for whatever reason. Don't make those mistakes. Those are easy mistakes to make, and they're easy mistakes to avoid. So do talk to, if you don't have an HR advisor, talk to Erin, talk to Regina, contact whoever else you consult with. If you're not from Southern California, and find someone who is an HR specialist who works with nonprofits. We know, Randall and I both know a lot of good people who do that as well.
Mm-hmm. Excellent points. Arthur is correct.
Awesome. Well, Regina, any closing words?
Just to say thank you. We know this is a difficult thing to think about. We also know that you just experienced two very wise people sharing a lot of great information. So hopefully over the weekend, you won't have to worry about things you don't know about this topic, and you can recharge and take care of yourselves. And thank you to Arthur and Randall for covering an awful lot of territory very quickly. Really thankful to you. Very, very valuable. And thank you to all of you who are doing the great work out there right now. We know you're doing amazing things in the community and under really difficult and uncertain times and conditions. So thank you all. It's always our pleasure to do this. It's just such an inspiration. So thank you.
Thank you. Be well.
Awesome. Yeah, thank you both so much. Arthur?
My pleasure. Hi, everyone.
Awesome. Have a great weekend, everyone. Stay safe and healthy, and hopefully see you next week.